All right, folks, welcome to our December 9th edition of This Week in Crypto. Lots to go over, as always. And this week, or previous week, I should say, has been uh, a very interesting mixed bag. You can see here on our data screener, prices have been almost 50-50 in terms of up versus down when looking at the top 100 market cap assets in crypto. And we're going to do our best to try to navigate several of them with obviously special focus on Bitcoin and a little on Ethereum this week after we dropped a big insight yesterday. Um, but of course, before we get into it, as always, we want to remind everyone who is new or old that we do not give investment advice on these types of streams. What we do is show as many metrics as we can to kind of show what the bullish and bearish divergences are to give you the best possible chance of um, essentially using those probabilities to your advantage. And we use these divergences based on historical evidence, what we've seen in the past when these kinds of anomalies form. So keep that in mind and feel free, as always, to ask questions. Let us know what kind of things have been pressing the assets that you're trying to look into right now that you think could use some more context and information, and we'll go over it with you toward the end of the call. So that said, it's been a fairly even week here over the past 7 days. We had Bitcoin up 1.5%, Ethereum down 0.2%. The big winner, funny enough, FTX token back up 28.5%, but that's not saying much because it really, really fell off a cliff. In fact, let me just briefly open it up. It kind of reminds me a bit of what happened with Luna, where after the dust settled, about a month after its implosion, we started to see a few very bizarre rises from people trying to pump up the coin that had basically been excavated from the top assets in crypto. And you can see here, as soon as FTX's announcement happened, the price, as expected, just fell off a cliff. You had one, very subtle bounce here on the 14th and 15th, but if we zoom in here from like the 10th and on, you can see, there is still active trading, people being speculative, or almost treating it like a meme coin. That tends to be what occurs in these situations where a company goes bankrupt and its native backed token is uh, still existent, and the coins obviously are still out there, so people can do as they please with them, and naturally prices are going to go up and down. But obviously, with a bankrupt company, it's not a coin we can recommend, and you obviously have to trade at your own risk. But just wanted to show that, considering it is the top performing asset in the past week, up 29%. You see here, Axie Infinity had a nice week as well, plus 16%. Trust Wallet token continues its big surge. Let me show you TWT really quick. Yeah, Trust Wallet token has been, what's this? Let's go back 3 months. So obviously its big pump happened just a couple days after the bankruptcy announcement for FTX. CZ Binance made a big announcement, kind of giving his vouch for TWT, that is, and we saw the big pump occur here. Everyone thought it would be kind of just a very short flash in the pan pump, but it turns out it's actually continuing to get some legs here, and it made what looks to be, was it a year high? Oh yeah, definitely a year high. Is it an all-time high? Am I crazy? I am not crazy. No, it is definitely at all-time high levels right now. And that's really what occurs when you have such a monumental news story occurs, is people kind of swing the pendulum the other day and they go from being trusting of exchanges to, okay, I need to really look into self-custody. And the CEO of the largest exchange in the world by a large margin, vouching for TWT, which is the native token of Trust Wallet, uh, it makes sense. He has that power, and it's certainly not an illegitimate product. Trust Wallet, it does what it says it does, even though there are plenty of other options out there. It's gone on people's radar, and if you, you know, whether you're investing because you believe in TWT or because you just speculatively felt that the crowd would jump on it, congratulations to you, because things have been going quite well back, going up to 262 where it stands now. Did it get up to 268? So yeah, I take it back. So it's actually at, when we zoom in, about 270 now. And just briefly while we're here to see if there's a few interesting metrics forming. So like this would be a concern, for example. You can see that, all the daily active addresses and circulation spikes occurred on the initial pump. Makes sense. This is when CZ made his announcement. And then you see prices continue to climb, but circulation and daily active addresses are going the other way. And when you have price and on-chain activity going in opposite directions like that, it's a bearish divergence if it's the price that's going up, and it's a bullish divergence if it's the on-chain activity going up. And this is the former here. So keep that in mind. This is a pretty unprecedented pump. And, we can see that the MVRV Z score is quite high. Whale transaction counts, there's still a little bit of legitimacy there, but we're looking at like $500,000 plus whale transactions over the past, I don't know, it looks like 3 to 6 hours. In fact, there's a bit of a delay here, which makes it kind of hard to show. But regardless, whale transaction count isn't anything special right now. And if we really want to dig into why the pump is occurring, we can look at whether actual large wallets are accumulating. And right now, with the price at $2.62, we do see that like the 100,000 to 1 million coin addresses, yeah, they had a lot to do with this pump. They actually initially dumped a lot of their assets as others were rising. But you can see here, after they realized, okay, this can be a sustained pump for TWT, they started to get back in the mix, and they went from 23% held just a few weeks ago to now about 26%. So they're back in the hunt as well. It doesn't look like anyone of significance here is dumping, which is a good sign and can mean that this coin can continue to flourish and potentially climb even higher. Certainly no guarantee of that, though. Yeah, you can see here too, this line is critical to signifying that it isn't just an organic, pump from like a small Telegram group. This is a lot of dormant tokens from large addresses moving their coins all at once. And the average age of investments went from about 142 days down to 103 days, just a few days later. So that tells you that a lot of older tokens that had just been sitting in their wallets suddenly awoke. And when we see something like this, when the mean dollar invested age drops like 33%, yeah, that's a sign that there can be some bullish upward movement for a sustained period of time instead of just a quick boom and then back boom down. Network realized loss, nothing special there. Social dominance. See, this is interesting to me. It actually had way more social volume and dominance here in October than it did on its huge pump. And yes, this is still a big spike in social volume and dominance, but nothing compared to this. And I'm sure there was some big news that I'm not aware of that happened in the first week of October. Maybe a new launch of some type or a feature for Trust Wallet that caused Trust Wallet token to get a lot of hype. And it did get a small bump in price then, but I mean, look where it is now. It's just exploded. So it's something to keep in mind, and we'll probably have more to talk about on Trust Wallet. I don't want to spend too much time on that. I want to get back to our screener really quick and point out something else that's interesting, which is the fact that social volume for Bitcoin and Ethereum have actually gone down. They've been, I mean, understandably, when they're flat over the past week, that's about as unpolarized as they can be, and that's why there's less discussion on them. But there's a lot more discussion on USD coin in particular because of this. Good old Reddit cryptocurrency mentioned that the stablecoin war begun. USD coin is now offering to convert Tether to USDC with no fees. And that's a pretty big deal. it's certainly an enticing offer. And USD coin, as we know, has continued to um, gain more and more accumulation from larger addresses as those same larger addresses offset some of their tether ever since really May or June, when we saw the Terra implosion, and then Tether right afterwards followed in the path of Terra USD, and it depegged for $1 from $1 very temporarily. It went down to 95 cents, and then the next day it was back up to $1. But that was enough to really scare people. Obviously, Tether is still the most held stablecoin in the world, and with a sudden 5% drop in a coin that is designed to always be stabilized at $1, yeah, that freaked some people out. And I think the ripples have been felt even now from what happened then. And USD coin has been a big opportunist in trying to capitalize on the FUD related to Tether. And so we're seeing some interesting, I guess we would just call it an offer more than anything. I don't think this is really a shot at Tether, but yeah, they realize that people are doubting Tether a lot, and they're offering to have people convert over to USDC, which is quite interesting. And we'll probably look at that a little more on the call. But the one thing I do want to show is this chart, which is the comparison overall of just the discussions between USDC and USDT. And it's a little misleading. Let me use the same shared axis. Didn't even change that much. So other than this one spike right here, USD coin is actually being talked about a lot more, at least for the last 3 months. You can see the blue bars are USDC, red bars are USDT. Yeah, you know what? Let me change this to keep it fair, because that might be misleading. USDC or USD coin. I don't want to have any, yeah, okay. That changed a lot, because if we include any words that include USD and the word coin in it, it's going to be a lot of discussion about things that aren't actually directly attributed to USDC. So now that we have an equal playing field in comparing the two, we can see that USDC did take the lead here in the past 24 hours in discussion briefly, even though it's normally going to Tether. We can see right here too, in late October, there was something big on the USDC side that I don't know. But regardless, this is interesting because you don't see this flip happen very often. And I think we'll continue to see more and more traction and interest going to USDC over time. That doesn't necessarily mean that your Tether is unsafe or anything's going to happen to it, even if it gives up its market dominance to USDC a little more or a lot more over the coming months and years. Tether, it's never quite given the full picture in terms of its solvency, and that is a concern. But they both appear to be here for a long time and are essentially the two top stablecoins that people are reliant on to trade out of volatile cryptocurrencies when they choose to do so. Another social volume comparison that is worth taking note of would be just the overall optimistic words like buy, buying, bought, bottom, bottomed, or bullish, or in comparison, sell, selling, sold, top, topped, or bearish. You put these 6 versus 6 words together, and you get an interesting picture that really show the spikes of when people are having FUD or having a lot of FOMO. And usually when there's a lot of FOMO, like these big spikes, you see what happens shortly after. Now, obviously, there were many reasons for this crash. This happened when FTX occurred. But regardless, you actually want to be looking for the high spikes in red when people are basically doubting that crypto is a viable investment. And that tends to be over time when you see the most rises occur. We can zoom out a little bit, maybe get some better perspective. And you can take a look at that. Here, when a lot of sell calls were going on in June, and even here, like just about 2 weeks, no, like 10 days after the FTX implosion, you see a big spike in sell calls there. And really, the closer the gap is between sell calls and buy calls, the more bullish in theory it should be. So keep that in mind, and it could be a good chart to add to your bookmarks to take a look at when people are too optimistic or too pessimistic. And we can also take a look at how often people are calling for buying the dip. Always a good measurement of just how optimistic the crowd is. We can go back a full year here. And obviously the big calls are revolving around when there is a dip. So like here, for example, a lot of people called for buying the dip, and at least temporarily they were correct. Here, it kind of flattened out and then fell again. Same thing here. People tried to buy the dip, flattened out, fell again. Same thing here. And you'll notice in most cases, once the hype for buying the dip dies down, that's when the true opportunity to buy the dip occurs. And we see these big surges in price to kind of catch people off guard. That's how crypto works. The less people who are interested and believe that crypto prices are going to go up, the more likely prices will go up, and vice versa. So you want to look for, theoretically, something like what we're seeing now, to be honest, where everyone was calling for buying the dip, understandably, around the time FTX imploded. And it's gradually started to come back down. And this is a very good sign. Just here, over the past week, we've seen pretty much the lowest social volume toward buying the dip that we have in the past year, kind of on the same level as we saw way back in February. This was back when the Russia-Ukraine war announcement occurred. I can't believe it's been almost a year now, which of course it's still going on. But generally when big events occur and everyone kind of overreacts, we'll see some dip, and then everyone will say, oh, this is just the beginning of the dip. And that usually means it's actually the end of the dip, and prices are going to subsequently rise. So keep that in mind. This is another great social volume chart that I like to refer to often. Okay, now moving on to Ethereum. We put out a big article yesterday about some of the biggest on-chain and social metrics and what they're showing right now for the #2 market cap asset in crypto. We can see right off the bat, we talk a little bit about shark and whale activity. And don't worry, we'll do the same thing here for Bitcoin momentarily to give an idea of how the overall crypto market picture looks. But for now, I want to just show what the article states. And right here, you can see that over the past year, shark and whale activity, which is defined as Ethereum addresses that hold anywhere between 100 to 1 million ETH, they were just declining and declining and declining. Obviously, some hype going up to the merge, followed by a huge drop in shark and whale holdings. They did not want to hold it after the merge for quite a while, and they held off for about 2 months. But finally, in mid-November, probably coincidentally around the FTX implosion, I think that this accumulation was going to start occurring anyways. But they started really buying rapidly right here. And note that these price bars, this is the price versus Bitcoin. So obviously, if we were looking at just the price of Ethereum, Ethereum's price went like this, right? It really dropped drastically. And just like every other asset in crypto, people were panicking, and smaller addresses were getting out and saying, you know what, I'm done with crypto. This FTX thing is the last straw. I can't trust exchanges anymore, and that's the way I trade. So I don't want to look into Trust Wallet and all that. I'm out. Meanwhile, sharks and whales, they started to get busy, and they accumulated about 1.4%, I believe, of the supply just in the past month. And that's a significant amount. Yes, we're still not where we were pre-merge, but at least since the merge happened, the whales, or sharks and whales, I should say, holding 100 to 1 million coins, they're back up to holding just about 2/3 of the supply again. And I think this could probably continue. You know, if we really start to see whales get up to 67% plus, that would imply that Ethereum could be a much better play, at least for the midterm, compared to Bitcoin. And you can see how the correlations of shark and whale holdings moving down and price moving down kind of connect, and moving up, they connect there as well. And the best part is this often gives some nice alpha. They start dumping before the actual price dump occurs. And that's why it really gives some value there. So besides that, and please feel free, this is a free article on insights on santiment.net. Read through it and let us know what you think. We love the feedback, whether it's good or bad, all the time. So social volume and dominance, you can see, like many assets, that's the blue candles for social volume. They're continuing to just go down and down as more and more people just drop out of crypto. But what's interesting is this red line here, which is the actual percentage of discussions related to Ethereum versus the other top 100 assets in crypto. And it's going lower and lower and lower. So Ethereum, as strange as it sounds, is actually relatively under the radar compared to how it usually is. And of course, there's so much focus on the pumping coins like synthetics, and even Waves yesterday had a big run. Litecoin had a big surge recently. And it's not really going to Bitcoin either, folks. Social dominance for Bitcoin is looking pretty similar to this. So the top assets in crypto are kind of being a little bit glossed over. And that can be a concern, especially with Bitcoin's social dominance low. But with Ethereum's social dominance low, if Bitcoin can stay okay and keep markets flat or start to rise, then Ethereum could be a big beneficiary, because there's not a lot of people just trying to buy the dip according to this social dominance metric. And then another good sign would be the fact that long-term traders for Ethereum, people who have been active for the past 365 days, yeah, they're down an average of 30%. And this line, just like the red one, all MVRV timeframes hover around 0%. So if you're below, that means that there's some making up to do in order to get back to the normalization point. Now, the midterm, the 30-day MVRV, that's just sitting at about plus 2.5%, so more or less about even. So anything can happen on the midterm, but history points to this being a buy zone for longer term holders, people who are patient and can put together a strategy where they wait 3, 6, or even 12 months. There is favorable conditions for them at the moment. Supply and exchange is also very notable. This blue line here is the percentage of Ethereum sitting on exchanges right now, with anything not on exchanges obviously being in self-custody, DeFi, some sort of staking away from exchanges. And the less supply on exchanges, the better. Obviously, this wasn't good, right? We saw a huge rise that actually occurred right before the big dump off. And when we see huge rises in Ethereum moving to exchanges, it's usually only being done for one reason. I can't think of too many other reasons. Maybe someone likes an exchange is offering to stake something, lend money out, something like that. But for the most part, people are moving their funds in order to sell them. And when we see big sell-offs, prices drop fast. And it happened a few times over the past year. This one being the latest around the FTX implosion. But since then, we're just continuing to go lower, down to 12.2% of supply on exchanges. And that is the lowest since late 2018, folks. So we're a little over a 4-year low now in terms of supply and exchanges. And that's a great sign, because it means there's less risk of a sell-off and more people, keeping them stashed away as an investment. Now, if we go too low and there's just no Ethereum to trade on exchanges, that would be bad, because then there wouldn't be on-chain activity. But theoretically, unless we're talking about micro numbers, moving the supply down lower is a good thing. Funding rates, not too much to say here. It's been pretty flat, relatively speaking. We don't want to see, huge longs opening up, because that can lead to prices falling. But we really haven't seen any huge longs. This only looks big because we're measuring the lowest versus highest points just over the past week here in December. But if we start seeing something like over 0.1% or so for the BitMEX funding rate, that would be a concern. But on the flip side, if we started to see negative 0.1% for some of these funding rates, then that would be a great sign that some shorts could be liquidated, and that could be used as rocket fuel to push prices upward. Network realized profit loss. Now, we did have a pretty huge spike here, which is interesting. Obviously, we look at what happened between August and now, and prices are way down. But on the shorter term, just in the past couple of weeks, prices are up about 17% still. And with that, there's been some profit taking just on the short surges from people who bought around here. And generally, profit taking spikes aren't great. You can see that right afterwards, prices did drop a little bit, but it's not that notable. You just want to make sure you're not seeing too many of these positive network realized profit loss spikes, because taking profit does typically lead to drops, while you can see quite clearly the opposite end. If there's a lot of people taking losses, that will allow the pendulum to swing the other way and for prices to rise like they did on many of these. That was not a good example, but many of them are, where you see these network realized loss spikes happen in the divots of many price charts right before a big pop happens. So yeah, overall, it is kind of a mixed bag, but we did find more bullish signals on this latest article than bearish. So keep that in mind when doing your analysis. It's always a matter of kind of factoring in the different metrics together on sentiment to put a puzzle together and say, okay, I looked at 8 of the best metrics for this asset, and 6 of them say bullish, 2 of them say bearish. I like my chances now. It's a game of probability. And anyone who tells you, Ethereum hits $1,106, that's a guaranteed sign that prices are about to turn around. Nothing in crypto is a guarantee. And we use our metrics on sentiment, both on-chain and social, to put together a probability picture where we say, 9 times out of 10, this type of whale activity looks like a bullish divergence. And we factor that in. And there's a reason we don't give investment advice, because nothing is a certainty, and we're not going to give advice that may or may not come true. But we are going to try to lead you to make the best decisions that you can make for your strategies, depending if you're short, mid, or long term on your trading quest. So that is our Ethereum article. Now we can kind of move over to some Bitcoin analysis. Before I do, I just want to take a pause and see if there are some questions I could potentially answer on our chat. If you see any good ones, Balresh, I'll check as well. Pretty quiet chat. That's quite all right. Thank you for the 13 of you who are on stream with me right now, and probably many of you who may be watching on Twitter or elsewhere. Thanks for watching and supporting the channel. It's always helpful if you give a like or subscribe if you haven't already. I'm sure you've heard it a million times. It helps us get more exposure. So thank you for the support for those watching. And I will get right back over to Bitcoin here to see what is going on. So we're looking at the last 3 months of Bitcoin's top metrics. And one thing is clear, the trading volume hype that occurred around the FTX implosion has really died down. And it's actually gone down to pretty much the lowest point, other than maybe mid-October right here. But it's at the lowest point that it's really been in for at least the last 3 months. I can even go back to like the last 6. Yeah, still really the case. It's at about a 6-month low, maybe even arguably a year-long low. There's a few points in the early part of the year where it was similar, but Yeah, this is not necessarily a bad thing. It simply means that there are less people interested in these suppressed prices. And the thing with volume is if you see rising volume on a trend, it generally means that the trend can continue. If you see that volume is falling off, there needs to be some turnaround on charts in order for uh, that volume to be renewed. And oftentimes, turnarounds happen if price is moving one way and volume is going down with it, because prices seek volume. They'll always kind of move the direction to give people the opportunity to start rising that volume again. So right now that's low. On-chain transaction volume extremely low. This is definitely at a one-year low right now. And I don't consider that a bad sign. I think that it's more just a reflection of the capitulation that's really happened throughout 2022. And it means that when whales really start to try to bump up the price, they'll do it with very little resistance, and it can happen in a swift way that catches a ton of people off guard. Now, moving on here to daily active addresses and circulation, there's not a ton to say. We did see a pretty big rise in daily active addresses in mid-November, but it's come back down to around normal areas now. And circulation isn't looking great. It is declining for sure. If I just highlight that, you can see that ever since really mid-June, these past 6 months have been a tough road when it comes to the amount of unique coins that are actually moving from address to address. So unlike volume, we don't want to just see circulation drying up, because on-chain activity needs to be there in order for prices to have a sustained rise. Even if whales try to pump up the price temporarily, if there's not a lot of people interacting, um, it can just, the price can fall right back to where it started. And we can look here on our NVT analysis chart, which you can download and make a copy of to plug in and check out in real time, by the way, as long as you've got your Sandbase Pro membership. Yeah, we're on our 1, 2, 3, 4, 5, our fifth straight month of a bearish divergence. So far in December, it's not looking great. There's just not enough on-chain activity for this model to justify that prices can start to pop up again. And this model's been fairly accurate. You know, I'd say that it was at its most incorrect when we had this big semi-bullish and bullish divergence throughout October all the way through July here, or June here, when prices were mostly falling. But for the most part, when we see red stretches, it's been correct about prices going down ever since here, March through September. You know, we did have that one big jump in April. Of course, we hit that all-time high. But then, of course, when the true all-time highs hit in October and November, the model was already pointing to semi-bullishness. July 2019 to January 2020, big bearish stretch, prices went down. This was an interesting anomaly. But yeah, this longer one, it predicted correctly and then started to turn around as it turned neutral. So yeah, we need some more optimistic signs from our NVT chart here. And right now, it's just continuing to show that there is not enough circulation to justify where the market cap is now, even with the market cap already being so much lower than where it was back in the all-time high month of November 2021. But it's not all bad, guys. We're gonna go down. Yeah, let's add MVRV 30-day really quick. Take a look at that. So the 30-day MVRV, we did see that around the FTX implosion, the average trading returns went down below that opportunity zone area, which we call about negative 15%. So generally, you can see pretty clearly the 1, 2, 3, 4 times that it went down below, we did see anywhere from gradual rises for a bit to pretty severe rises until the MVRV went positive again. So just like RSI and some of the other metrics that you might be familiar with in TA land, MVRV is a great way to understand and get context of when you're actually buying low, because everyone tells you all the time, buy low, sell high. Well, the tough part is actually figuring out what low is. And it's all relative based on how low other traders' returns are. And you can see when those returns are really low here, boom, we get a little bit of a bounce. Here, it at least stopped the bleeding and prices have risen. You know, since it bottomed out on November 9th, Bitcoin is up 8%. It may not feel like that, but yeah, being back above 17K is at least better than the 16.2 I think that we got to. I think the low at one point, yeah, okay, it got to like 15.8 and even 15.6 here. So yeah, being back in the 17Ks is not the worst problem to have. And then this blue line as well, the Z-score, this is basically factoring in all of the different time frames together to show just what the standard deviation is in terms of how low MVRV's collective values are compared to the norm that we see. And it's rarely going to be in negative territory, but we are in negative territory right now. And that's really only occurred a few other times over the past 7-8 years here. And when they have gone into negative, that's when price bottoms have formed. We saw it in March 2020. This was Black Thursday. And we saw it in late December, late 2018, early 2019 as well. So the fact that we're in negative territory for really just the third time over the past few years is telling for sure. And it's indicative that we are definitely going to be closer to a bottom right now than a top. Of course, the top was 68K back in November, but this points to the fact that if there is a lot more pain, it may not last that long because there's already so much pain that has occurred and there's so much underwaterness. I love that I just made up those words that traders are feeling. That it's difficult to justify an argument for severely lowered prices from here. So long term, very good sign. Short term, with circulation being so low, that's a concern for sure. Now let's zoom back in here. Let's just take a look at the last week of funding rates for Bitcoin. Yeah, they're pretty as much as neutral as you can get right now. They've been moving in a very tight range here on BitMEX, Binance, DYDX, and Deribit. So nothing to really get excited about or concerned about here until we start seeing some big anomalies of negative 0.01 or positive 0.01 on the funding rate score sheets there. Whale transactions go back to the past 6 months. So yeah, really interesting. I want to look more into whether FTX was the direct cause and maybe they were, why the whale transaction counts were so high. I don't know if one exchange, maybe only Binance would be capable of keeping whale transaction counts for Bitcoin up this high. But nevertheless, you can see what's happened since FTX has gone off the map and trading stopped there. Whale transaction counts have just declined, and we're at a 6-month low, probably a 1-year low if I had to guess, easily. Way back when. Yeah, so whale transaction counts are pretty much down to late 2020 levels right now. And that's not a big deal in terms of price, but it does show that there is less volatility to come while whale transaction count is so low. But we can still see plenty of bull runs happen while whale transaction counts are low. And when it's high, that's when you see a lot of these jagged edges to the price chart because there's huge transactions that can move prices in one fell swoop after they occur. Right now, there's less chance of future volatility because of 100K and $1 million plus transactions being as minimal as they are at the moment. All right. Bitcoin's supply distribution. Let's do this. I'm going to combine 100 to 1,000 and 1,000 to 10,000 coin addresses. That'll be in red there. And then I'm going to add on the price. that a little darker, make it a bar chart, and we're in business. So we'll go back 2 years here, take a look at just what impact whales have had and what they're looking like right now. So really starting around here, you can see around March 2021, this was 1 year after Black Thursday, they started to peak and took pretty significant profit. Obviously, there was a then all-time high in April 2021, but whales were already taking profit about a week before that occurred. And after the all-time high hit, yeah, prices retraced pretty quickly without the whales' support and them taking profit and dumping themselves. Went all the way down here to September 2021, and then boom, huge accumulation right here, sending Bitcoin back up to its now known all-time high of just above 68K. And again, they were taking profit about 2 weeks before it, which is why we love this metric so much for its alpha property. And they really took profit. This was kind of a weird exchange maneuver. So it didn't affect price too much. Stayed fairly flat, then a big dump off here in June. This was during the FOMC announcements and inflation concerns, interest rate rises, recession talk. So big dump there. And really they've kind of gone both ways here. They started accumulating all the way up until mid-September, then dumped, and now they're actually back on the rise. This is a decent sign right here over the past week. I'll zoom in a little bit. So over the past week, going to December 1st, just hold down shift. That's a decent accumulation of about 0.35% of the supply, with 55 new whale addresses popping up on the network again. And what we don't want to see is the whale numbers dwindling like that. So considering just how hammered the whale addresses have looked for the past couple of, or at least 1 year, it's always a good sign when we're at least seeing a little bit of a direction move going positive, because prices will follow how this line looks given enough time. So, obviously patience is advised. We're still much lower than we were 1 year ago, but price is also much lower than it was 1 year ago. So there's an argument that we are sort of baked in already with the price. And if we start seeing accumulation again, yeah, prices should theoretically start to recover. We'll come back to this in a moment. Mean dollar invested age still rising, up to about 488 days for the average address in terms of its holding of the investment, going back like 3 years or so. So yeah, this is what we want to see, something like this in late 2020. Big decline in dormant tokens, going from 432 down to just 178 days on average that investments were held in an address. That's what causes these bull runs. And then as soon as dormant tokens start to become dormant again, that's when we see the declines begin. So prices, as we see, they can still go up even if mean dollar invested age is rising. But you can see that as it was rising, there's still a lot of dips and curves and flatness within it. And right now we just haven't seen that for a long time. 488 days, where it sits now, is the highest it's ever been. Doesn't mean it can't go to like 500 days plus. Bitcoin, at the end of the day, it's only been around 14 years, as weird as it sounds to hear only. We only see these rises and falls every 2-3 years, so there's a limited opportunity to how much of a sample size we can look at. But for now, mean dollar invested age is quite high, obviously the highest it's been relatively to any other time. And that means that there could eventually be a little bit of a change that causes these dormant addresses to start moving once again. Network realized profit loss. I think this big capitulation spike is a good sign back here 3 weeks ago. Generally, they lead to bottoms occurring, and we just need to be patient here and see if all of this network realized loss finally leads to the bounce that many of you are waiting for. I think that this is a very good sign with so many negative spikes popping up on the network realized profit loss chart right now. But we'll wait and see. It's sort of like MVRV. It's like the 365-day one where it can only stay this negative for so long before there has to be some equalizing opportunity out there. And just like Ethereum, folks, supply and exchanges is also at a 4-year low for Bitcoin. It's down to just 6.4%, which is pretty crazy. This was a huge outflow day, one of the biggest we'd seen in like 5 years. So coins continue to be moved into self-custody, and that means there's less risk of a sell-off. Ideally, we'd still see more and more supply moving off exchanges with circulation starting to heat up a little. But for now, circulation's going down too, which means that there might just be kind of a period of flat continuing to come based on these long-term metrics that just show people aren't engaged, but at least, huge sell-off risk is diminishing week after week after week. And let's see, let me switch to this really quick, because I want to show you how social dominance is looking right now. Let's full screen that. Go to week. Okay, so this is the past year. I actually want to go to we'll do 2 years. Generally, when we see Bitcoin's social dominance way up high, it leads to good things, and prices have a good chance of rising because the focus is on the number one asset in crypto that allows all other assets in crypto to be able to rise or fall. So Bitcoin needs to have some focus and attention on it at all times in order for us to thrive. Right now, it's just not. We're continuing to see people focus on the latest pump and dump assets, jumping from one short-term opportunity to another instead of, viewing the full crypto picture and getting their assets into Bitcoin. And with that said, it means that we're likely not out of the woods yet. You could see a big pop and we could go to 18K or something, but this tells us we're not about to go on a huge bull run to 30K just yet. Nothing that extreme until we start seeing the social dominance of Bitcoin improve and start to get above this line, which represents 20% of Bitcoin, of discussions in crypto platforms related to Bitcoin. So we're way below that 20% line, actually around 11 or 10% of discussions related to Bitcoin only, which is quite low. And it's pretty clear. I mean, right here, I really love what this shows, where there was healthy amount of discussion, prices suddenly rise. Yes, there was a very short-term anomaly where it got below, but that's barely below. And then right here, a lot more healthy discussion on the dip. Prices end up making a new all-time high. And you see about 2 weeks before, just like with the whales hinting, 2 weeks before we started to get a little too much altcoin hype. People were focused on Dogecoin, Luna back when it was still healthy then. And you can see what's happened as Bitcoin's social dominance got lower and lower until here, when people started talking about Bitcoin again. And what do you know? Prices rise and then back down to not talking about it much. Prices fall. So there you go. Social dominance is looking not great at the moment. And as promised, let's take a look at the ratio of transactions in profit to loss, and then we will take some questions. Okay, let's go just the last 3 months. Make that 6. Switch this to 1 day. All right, so blue here is the ratio of profit to loss for Bitcoin, and then magenta or maroon, whatever you want to call it, this is the Ethereum ratio. We want to see negative values mainly because that implies that capitulation is occurring. Weak hands are dropping out, selling their tokens while they're already at a loss. And we don't want to see things like this, where people are selling their Ethereum at a high profit. Right now, Bitcoin went from 2 weeks of being just slightly more profits than losses to now more losses than profits. And Ethereum is also there. So these are actually both good signs, and it means there is a higher likelihood of a rise. When we see these native spikes, bottoms tend to occur. Yeah, I like the way this looks at the moment. It's not extreme bullish divergences for either, but it at least shows after a couple of weeks for Bitcoin that people are starting to trade their assets at a loss again, which is what we need to start getting some prices to jump back to where we're all hoping, or most of you are hoping. But yeah, that's it on the analysis side for Bitcoin. And if there are questions, we can jump into it. Are you seeing anything that might be worthy of some analysis, Balraj?
No questions so far.
Not a prob. I will look at a few myself. Ren has been in the news a little bit. Alameda backed Ren, and because of that, there was some pretty unsteady price movements just in the past couple of days here. So if we go to the last 6 months, we'll look at our main template once again. And yeah, so super interesting. We had this huge pump here from the 21st to the 26th. Massive on-chain transaction volume and some trading volume. And that marked a local top for sure. This is very common. You can see the exact same thing happened here. You can wait and wait and wait. And as soon as you see the spike showing that a ton of transaction volume is occurring, that's when you want to get out on these huge pumps. And this is the same for many assets. It's not just Ren. So consider this kind of a teaching lesson on how we can use volume to our advantage. The smaller the asset, the more you'll see kind of steady volume, and then suddenly, boom, huge spike, because it takes much less energy from an individual trader or trading group to suddenly make volume or on-chain transaction volume just explode. And generally, if they occur the opposite direction, like when FTX collapsed and you see a bunch of on-chain transaction volume, that can signal that a bottom is upcoming, which it eventually was. But even more so on the top end, this was the clear top signal. Prices have dropped ever since. It's down to 8.4 cents or so right now. But we do see this spike, which is interesting. It could be a signal we're close to the bottom. But we did see like a big dump from Ren specifically compared to the rest of crypto yesterday. And then it started to pop back up, and it's neutralized for now. But I think there could be some more news articles about Ren's connection with Alameda. Not that Ren has done anything wrong. It was just an investment by Alameda. And kind of because Alameda is in collapse mode as well, and the reputation has really sunk. Any assets that were part of its investment portfolio could be taking a hit here. Let's see what else. Circulation, daily active addresses, same thing. Circulation spiked to its largest point in the past year, and then that's exactly when prices started to retrace. But look for another one while prices are moving down, and that could signal the time for you to buy, just like what happened here and here. MVRV ratio, we are underwater, -3% or -2% currently for 30 days. So just a slightly good argument to buy at the moment. And a better argument is right here because the long-term MVRV, 365 days, is way down at -53%. And that is a massive loss for the average trader that will eventually be made up for. Finance funding rates, yeah, people are shorting again. That's a good sign. It's interesting though, because everyone was shorting here, so tons of short liquidations happened on the first half of it, but people continued shorting as it collapsed. And we did see a rebound, and the rebound finally got people to long it again. And during this longing period, it did go down a bit, and now we're actually seeing people short it, which means there's further argument that we're nearing or have already hit a price bottom, because these negative spikes are just asking to be liquidated, and prices can rise from that. Whale transactions are pretty non-existent. We actually haven't seen any transactions valued at over $1 million since November 24th. So we're going on about 2 weeks now since that's happened, and that means there's kind of a general disinterest. Supply distribution should be pretty important though. Let's take a look at maybe just, I think just the million to 10 million line is the best, because we're looking at what is that, $80,000 all the way up to 800,000 or so. And we see, so they hold about a third of Ren's supply. Since the 25th, they have been accumulating a lot long term, still seeing a bit of a dump off, but I like that the past 2 weeks are seeing some accumulation here. It just needs to be a little more to really be like a signal for some future profits coming up. This is interesting as well. Zoom in a little bit. Ren's ratio between profit and loss transactions is extremely low right now. This would be like the break-even line right there. So yeah, we've had 1, 2, 3, 4, 5 straight days of super severe losses. And you can see it happened during this stretch too, when prices were kind of flattening out. We did see one final bottom, but look at what eventually happened to Ren after all of these major loss ratios were occurring day in and day out. As long as this stays really low, that's another good sign of bottom signals happening and good buy opportunities. So I'm liking the majority of these assets for Ren. I did not pre-prepare these, so I'm kind of discovering them in real time. And then we have something very interesting happening here for the mean dollar invested age. I'll have to check with the devs after this call to make sure it's real, but I presume it is. We're seeing a massive amount of dormant tokens being moved right now. That's one of the biggest I've seen, actually. So the average days in which Ren investments were sitting in wallets was around 544 days. And then just in the past 24 hours or 48 hours, it goes down to 109. Yeah, we might have to write an insight about this. This is a pretty fascinating stumble upon moment right now. So stay tuned for us to figure out more about what this is all about. It could be related more to the Alameda funds that were holding a ton of Ren. In fact, I think that's a very strong likelihood. I'll talk to Gary more about that on our team. He's kind of an expert in this asset and has been studying a lot lately. So yeah, that would be a very good sign. If this is legitimate, it means that dormant tokens have just suddenly been poured out into the world and moved away from the same address that it was sitting in for a long time, or addresses. We can also see, okay, so yeah, a lot of Ren was moved while it was at a loss. And this is the biggest spike probably ever, a little bit bigger than the one in June. And look what happened right when that happened. If we go from this point, network realized profit loss from June 12th till about, I don't know, call it 5 weeks later. Yeah, Ren's price jumped about 60% or so. So who knows? We don't necessarily know if history will repeat itself, but odds are in Ren's favor because most of these negative spikes come with a subsequent rise, as we see in many of these cases. social dominance also has taken off a little bit. So people, I don't know, maybe it's related to this big movement of assets, but whatever the case is, stay tuned over the weekend and going into next week. I think we may have some more updates for Ren coming up. And that's about it. Maybe we'll just conclude here, folks, but drop your questions in this video if you'd like, and we'll still read it over after the stream, or you can jump into our Discord. Balramesh, maybe you could leave a link for our audience just so they have an idea of how they can talk to us directly. But yeah, overall, it looks like a mixed bag this week. I don't think prices are in serious jeopardy of falling off a cliff even further based on some safety net metrics that are showing right now. But we're also still struggling with circulation being low for Bitcoin and Ethereum. And until that changes, I think we just have to be hesitant to really do anything too crazy at the moment. And of course, your money is your money. Invest as you please. But we're still in kind of proceed with caution mode right now. And we'll have more updates on any anomalies as they break. But until next time, folks, I hope you have a wonderful weekend. Stay safe out there. And I'll be around if you guys have any questions on Discord, as will the rest of the team. So take care. Talk soon.